Hello and welcome to Pro Trader Strategies market commentary for Thursday, April 1st. Yes, it is April Fool's Day, and my name's Eric Wilkinson. That's no joke. I'm with Pro Trader Strategies. Yes, and you may very well recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how those impact the markets with some of my market analysis. I do the same thing in these daily market commentaries, but I go a little bit further and talk about option strategies I implement around those assumptions I come up with my market analysis. And for you folks, what I've done is streamline that process in order to find the optimal option strategy for any given assumption. We aren't just coming up with a directional assumption, say a bullish assumption, and say, hey, that means it's a long call. No, there are obvious and very important aspects of the pricing of these options that we need to take into consideration before implementing that. And what I do is streamline that process for you to find those opportunities. All right, so without further ado, let's get on with the economic data across the pond. We got the PMI numbers. Remember, that's Purchasing Managers Index, my favorite economic data point. Why? Because it's forward-looking. These purchasing managers see the demand coming into the manufacturing sector and then therefore set up their buying of the raw goods to go into that manufacturing process to meet that demand. So if they see demand coming off, they're going to be less aggressive in their buying, right? Or less confident. So this number, anything above 50 is expansion, anything below 50 is contraction. And again, this is the final number. Remember, we got the flash estimates. These are the final numbers for that. And across the pond, Spain, slightly higher than expected, only by 0.9%. Manufacturing out of Italy coming in line with expectations. French manufacturing maybe slightly higher by 0.5%. German manufacturing right in line with expectations there. The broader European region in line with expectations as well. And Great Britain's flash estimates were slightly higher by 1 percentage point on the manufacturing PMI there. Now, moving back here to the United States, it is going to be a pretty wild day. This has been a very data-packed week, if you will, and a lot better than expected data than I was expecting, especially on this manufacturing, because we were getting all kinds of wild numbers out of like Philly Fed and things like that. So with that said, we got our ISM, which is our main PMI number for the manufacturing sector. ISM is Institute for Supply Management. The PMI, again, is just Purchasing Managers Index. We also got our flash estimates, or final flash estimates, which were in line. But the ISM PMI, which is more important to look at for us anyway, coming in at 64.7, expected to be 61.5. Better than expected there, and above 50, showing expansion in the economy there. And something to note with this 67 mark, that is the highest reading I have seen in probably, I would say almost maybe even 15 years. So that number, just knocking it out of the park for the Institute for Supply Management manufacturing number, coming in at 64.7. Just a massive beat on that number. Construction spending, slightly better than expected there. And the prices paid for the ISM was higher than expected by about 2 percentage points. And throughout the day, we're getting the Ward's vehicle sales. Keep in mind, you're going to have to keep an eye on the news to get all these vehicle sales and writing them down and things of that nature. But GM and Toyota, I think, have already released. GM saying that their retail sales to the retail sector was up 19%. And I think Toyota was up about 21%. So better than the expected. I think it was 18 and 19 respectively from the street estimates. So people are out there buying cars, which is what I expected coming out of this pandemic, right? People aren't going to be so keen on jumping into an Uber, not knowing who was in the car before them. All right, natural gas storages. We've seen some cold weather across the United States and seeing spring kind of hold off a little bit. Well, with that said, we would expect expect to see some natural gas storages get drawn down due to heating, right? Well, we didn't see that. We saw a build of 14 billion cubic feet, expected to be a drawdown of 20 billion cubic feet. So not showing a whole lot of demand for that heating oil right there. And finally, tomorrow is a banking holiday for the United States. The stock market's going to be closed, but we're still going to get the unemployment rate as I believe the Board of Trade is going to be open. So the treasuries will be open for that. I'll have to double check on that. But having said that, the market is going to show a little bit of angst today. We could see some volatility as people try to shore up or hedge those portfolios because they won't be able to do anything really tomorrow. All right. And then heading into a weekend could exacerbate some of that angst. All right. So we could see some volatility today. All right. And the OPEC meeting. I don't know if I mentioned that. I know I mentioned it yesterday, but the OPEC Plus meeting is going on again today. So we probably should get word from them as to what they are going to do in regards to production. Are they going to continue with the cuts, or are they going to lift that? All right. Bonds up a point and better than a half, up almost 2 points on the day at this point in time. Bonds making a move. We talked about this a couple of days ago. It looked like we were finding a little bit of a bottom here, and that would break this cycle or this trend of a bearish pattern, because within that trend we have a pattern of lower highs, lower lows. Right now we have not gotten a lower low. If this market rallies and breaks the previous high, that would break that overall trend, creating a new trend to the upside with a pattern within that trend. Okay, so we are looking for I'm looking for this trend to get broken and trade up into the hopefully 160 handle. I don't know if we're going to get there anytime soon, but at least into the 147 or 157 handle there. All right, so bonds making that move to the upside. And then we also have gold ripping to the upside by about $14, right back to the point of control, which is lined up with that 1730 area, which is right where we are now. Now we're going to have a couple of overhead resistances here. We got this trend channel here lining up, and it's going to depend on when we bump up against that. But it's also bringing that 50-day simple moving average in line with that. So that is going to really be a double resistance. Why? Because some people will look at that SMA as a resistance. Some people are going to look at trends or trend lines as a resistance. And then just above that, we got another line that we drew in here at 177-ish. I believe it's 177, 1,780-ish. So that is where we found support before and or resistance going way back. I don't have the lines out there, but you can see that it has acted as a support and resistance before. So that should come into play as well. All right, Bitcoin continuing to move to the upside, up $500 on the day. VIX is falling out of bed. Now yesterday, E-mini S&Ps, the broader markets were moving to the upside. Not a whole lot of worry about the downside, but I'm telling you, I'm seeing a lot of stocks having some bearish patterns set up. So are they bucking that trend, or are we going to continue with that pattern, or bucking that pattern, I should say, the candlestick pattern there? All right, NASDAQ moving to the upside above that trend line that from the 2017 area and above the simple day moving average. We are approaching value area highs here, but we've seen a lot of volume and open interest up here, so a stretch above that is not going to show as much support and resistance as we would expect from these lower ones, because of the point of control being so close to that area. NASDAQ moving to the upside. E-mini S&Ps printing 4,000 today. That is historical. Obviously has never been done before, so everybody's celebrating that. And the fact that it happened inside of the day session. Remember, I've talked about this for a long time. We do have to take a little bit more credence in the overnight prints, because more and more people are trading overnight than in the past. We used to say on the floor we would only look at the day session, but now we really have to put a little bit of credence, especially with the volume that we're seeing in these overnight sessions. So with that said, we are keeping an eye on some of those overnight highs and lows, but it is definitely a better print during the day session. That is when the most time involved, or most, not time, but the most volume is traded in these different underlyings. And we can see that we got a top there, but it is looking a little toppy during the day session. And points of control throughout the week, continuously higher. That is bullish, folks. We are seeing that continued tranche higher, meaning acceptance of value at higher levels. All right, so yesterday, late in the afternoon, I decided to throw on a trade with Snap based on the chart setup. We've got a bottoming pattern here. I've been keeping an eye on it for a couple of days right here to the 61 Fibonacci. We settled above that. Finding support there is bullish. We made a move as soon as it was getting we were getting confirmation of that. It looked like it was going to be a solid confirmation towards the end of the day. I went into the June, so I got my long duration, limit my theta decay. Why? Because we have low implied volatility for this particular underlying. And I wanted to limit that theta decay, get out in time, give myself a little bit more time to be right. So I went into the June, bought the 60 calls in there for $3.55. Now it's up a little bit higher today, but based on a swing trade, that's why I set this up. We're going to actually be talking about all the rules involved in buying just a call for a bullish move and what you need to know before implementing that strategy around a bullish move, why you would want to and why you wouldn't want to. So make sure you check that out, because that is specific in leading you down that blueprint to finding the right option strategy on these different trades. So check that out at Pro Trader Strategies. And that's about it. I haven't really done anything else. So just keeping an eye on a few things. IBM, remember I put on a long put spread around this trade. I also have on a long stock position with covered calls. I did the long put position because we got up there around those highs, and that was the opportune time to try and implement something for a swing trade. Now remember this, the other part of my trade is a longer duration trade, right? I've got the stock, I'm doing covered calls, lowering my overall cost basis, but this was a swing trade within my overall portfolio based on what we're doing here in these webinars. So I needed to set that up because of that swing trade setup. I didn't cover my stock for that trade because I have the covered calls on there to protect me on that lower overall cost basis. But take advantage of a little pullback here, I would be happy to do that. So I am working through that as well, just keeping an eye on my portfolio, looking for opportunities out there. Everything else looks pretty good today. So I'm gonna leave it as is at this point and prepare for the webinar that we're gonna be talking about the long calls and when, where, and why you would set those up in any given environment and why you wouldn't want to set this up in some environments, okay? So check that out at protraderstrategies.com, and that's all I got for you folks other than check out the disclaimer over there. Can't take that, take it easy.